has been gaining in trade. That stock is up about 4% even now. This after the company reported what looked like a pretty strong set of numbers for the fourth quarter. Business momentum has been robust. Sales of NPAs to ARCs or asset reconstruction companies have helped Spandana actually reduce its NPA levels as well. So let's straight away go across to the management. Shalabh Saxena, MD and CEO of Spandana Sphoorty, is with us now to take some questions. Shalabh, thank you very much for joining in. First, let me just get this, sale of ARCs, sale of bad assets to ARCs, this piece out of the way. Your gross NPA has fallen from 5.3% to 2%. How much of it is because of the sale to ARCs, and how much is it that you managed to recover more? What is the recovery picture like, write-offs and the sale, and the guidance on asset quality going ahead?
Sure. So good morning, and thank you for inviting me. So two parts to your question. We did two ARC sales, one in Q3 and one in Q4. Overall, what we've done is it's not just the input, it works on the SRA, which is the way we kind of worked towards it was to ensure that one, as you said, we kind of got our NPA levels within control. One. Two is we've taken up the provisioning up to about 70% on the unsecured book. So, so to that extent, if we were to normalize and you see the flows on our balance sheet, the last year, 4 quarters prior, our flows were almost about 8.5%. Those 8.5%, I mean, I'm just breaking this up into two. One is what flows in, and one, how are you preventing the flows? So from 8.5%, we are down to about 0.55, 0.56. So from a pure portfolio quality point of view, we've been able to hold the flows, number one. Number two, the GNPA has been controlled through the ARC, one. And obviously, we've taken the provision up to 70. So overall, it has less to do with how much GNP obviously was aided by the ARC, but then we've kind of offset it by the increase in provision. So overall, from a guidance point of view, the credit loss that we have baked into our financials this year and the next year is about 2%. Any microfinance company which works on a regular basis, I would be surprised if it would get anything more than a 1.25 to 1.5. However, being slightly cautious and taking a conservative position, we've kind of put it up at a 2% for the next 2 years. I'm just winding up. We are done with in terms of the so-called cleanup. Now it's all growth for us for the next 8 quarters.
And what's the growth that you're targeting, Mr. Saxena, over the next 2 years?
Yeah, so let me speak about the FY24. We've ended FY23 at about 8,500 odd crores. We are targeting about 35 to 40%. End of this financial year, our AUM should be in the range of about 11,500, 12,000 crores. So that's the range that we are targeting. There are tailwinds. The quality part is now taken care of. At an industry level, the tailwinds are there. And then obviously we are in a reasonably good position to take advantage.
Okay, so 11.5 to 12,000 crore of AUMs by the end of FY24. And correct. A 35 to 40% growth is what you're anticipating. So in your EMIs, there is a greater component of interest payment and lesser of the principal repayment. Can you explain that?
No, so microfinance is our very short-term loans. The tenure starts at 12 and ends at 24 months. If I look at my portfolio and the way the portfolio operates in our company, or for that matter, any microfinance company, even though we would offer the tenure, our average product tenures at a customer level are about 11 months. So the loans run down pretty fast, and hence for us to even stay in the same space or in the same place, we'll have to run doubly hard. So hence the specific example that you're talking about, it has less to do with the character and the nature of the product, number one. Number two, we operate two kinds of installments. There's a weekly installment and there is a monthly installment. The EMI that you mentioned is the monthly one. So, the weekly runs even faster. So hence you see that anomaly. So we, from an industry point of view and specifically to us, we will always have a positive ALM, because our loans would be say 24 months, but they are foreclosed by the customer pretty early.
We leave it at that there. Thank you very much, Mr. Saxena, for joining in. We look forward to having a mid-quarter discussion as well. Get into a break. On the other side, we've got the